Simon Dixon, BNK to the Future.
BNK. There's a story behind that, actually. We started as Bank to the Future. I wrote this little book called Bank to the Future. It was the first published book in the world that included Bitcoin. And it was after getting very excited about attending the first Bitcoin conference. It was held in Prague. There was about 40 people in the room, nothing like this, just a bunch of hackers and geeks, and you had to knock on the door and give a special code. And I bought a Mars bar for 1 Bitcoin and was very excited about it as well. This book, we had to actually take the A out of it because you need to have a banking license. So I was working in investment banking in 2006 and decided to leave to give talks on the future of finance. It was then that I found myself with this guy called Johnny Bitcoin at Occupy London that introduced me to this whole concept. And it was a really exciting thing to see. So I personally do believe, and what I've seen coming on from the previous debate, that it is actually about creating a market for Bitcoin and disrupting institutional. At the same time, I've made investments over the years in both the institutional side of the business, of the crypto market, and also the decentralized side. Let's call it self-custody. So the way that I look at it, I'd like to share with you some of the things that we've been doing over the years with crypto equity. And this isn't just theory. These are things that we've been working on since 2010. When I see the market right now, what I see is two very different markets, and I think both of them are going to change the world in a very big way. The first is the hardware wallet to hardware wallet, decentralized, own your own money, spend your own money, be your own bank. And it's actually one of the most important things in the world for 2 reasons. 1, self-sovereignty and freedom, and secondly, to regulate the regulators. We have never solved the problem of who regulates the regulators. Well, when you have a cryptocurrency that is an exit from the traditional financial system, and you have a decentralized asset-to-asset, hardware wallet to hardware wallet, fiat currency-backed stablecoins, all these things, they regulate the regulators to make them make more honest financial systems, because now for the first time we have choice. And that is a very important part of it. At the same time, in the whole decentralized movement for hardware wallet to hardware wallet, own your own money, spend your own money, have a monetary policy based upon savings rather than debt, you also have lots of scammers and people out to steal your money. And because of that, you also need some kind of the regulated industry, with the decentralized industry regulating the regulated industry. These two things are going to make massive, massive change in many, many ways. So, in terms of crypto equity, what have we been doing? The approach that I've always followed is I think the end game is that we will have a world where people can own their own money and can exit traditional finance. And we will see that end vision of the freedom that can come from that as this ecosystem evolves. But at the same time, you need to have that transition phase. And so we've been investing in both over the years. So, sorry, this is a little thing. So I just wanted to end this because I've only got 10 minutes. I'd normally give a longer presentation. But essentially, over the years, we've been investing in the equity of crypto companies. Since we made our first investment, which was a gentleman called Max Kaiser, we set up a fund and invested in a startup in 2011 called BitPay. And BitPay was pitching, trying to create the PayPal for the Bitcoin industry. Here's some of our portfolio that we've been investing in over the years. We've now got equity in over 120 different companies in the industry. Some of those have gone bust, some of those have gone on to become unicorns. We've got about 7 unicorns in the portfolio. And the way that I've always thought about things is that we built everything. When we started in 2010 and created the first crypto securities business that allowed people to buy equity in crypto companies, we had to do it in a centralized way. There was no chance in hell regulators were going to understand what we were doing. So we had to translate everything into traditional ways of doing everything. So we accumulated a lot of equity. But what we're doing is rather than demanding the world to adjust to securities tokens or adjust to this very complicated thing for people to adjust to, we've iterated out. Just like the way Bitcoin grew, a lot of people got into Bitcoin because this company, Coinbase, allowed people to do it in an easy, centralized way. But then what their job is to go get a Trezor wallet, get it off Coinbase as fast as possible, and own their own money and get the freedom that comes from it. Because if that appreciates in value, there's going to be tax authorities, and you're going to be explaining, just like with your bank, why you have got that money, where it came from, how you got it, and they just won't let you withdraw it unless you actually can prove all the paper trail of what happened from there. So your job is to come in, if you're new to the market, sometimes through the centralized way, get to the decentralized way as fast as possible. It's kind of what we've been doing at BnkToTheFuture. So for the years, we've been accumulating equity in many of the companies, and rather than inflicting the security token ecosystem when it's not ready, we've been doing two simultaneous markets. So now on BnkToTheFuture, we just launched into beta the ability to buy and sell equity in the largest companies in crypto. We've currently got Bitfinex, Ripple Labs, Coinbase, Circle, and through our SPV structure, you can now buy and sell shares for the first time in early stage pre-public companies that are making a difference in this ecosystem. We're currently in beta, so you're only able to do it with things like Tether, but we're going to be integrated with 35 different fiat currencies and 35 different cryptocurrencies, allowing you to buy and sell and trade these in the future. But what we wanted to do is, rather than inflicting the security token ecosystem upon everybody, we gave people the ability, step by step, to actually take that equity that's traded in a centralized way and opt out. So we invested in some of the companies that are doing big things in the securities token ecosystem. One of our portfolio companies, Securitize, has been working on building protocols for this. And we launched the BF wallet. Now, the BF wallet is a wallet just for security tokens. You can use it as a Bitcoin and Ethereum wallet and a BnkToTheFuture token wallet, but the main thing is it's meant to facilitate the security token ecosystem. You're able to take your centralized equity, and gradually over time, we're turning those into liquid securities built upon Bitcoin, and also you can choose to take them off through the Ethereum, through the securitized protocol. We built the identity, securitization. We've accredited approximately 80,000 investors in line with their local securities laws, and we're putting that into the blockchain and into the protocol. Then what you have is the ability to just invest in equity in a traditional way, trade it in a centralized way, but opt into taking that into your wallet, owning it, and then complying with the securities laws and regulations in the way. The big game, obviously, is that we want to have that done in a self-custodial way as well. So we've launched a business that's designed to disrupt ourselves, given the technology that we have today, before the others disrupt us and the competing market. So really, there's a bit of a theme in the investment thesis. So right now, people are able to invest in equity in these companies, and then we're going through iterating out, and eventually the demand for securities tokens, peer-to-peer, decentralized, we think it will at some point dwarf the centralized version, but it's going to take a few years and a while to get there, and we're allowing the consumer and the investor to make the choice. My final point, for those of you who want to join our community, there's a couple of QR codes. My final point, as we move over to the debate, which I think is going to be very entertaining, is that it's all about this having these different ecosystems. There's going to be investment opportunities in both, but the end game is, I still think that the end of all this, while we might get a multi-trillion-dollar security token industry, the most important thing that does come from this is that we do have Bitcoin, and we do have a fixed money supply. We do have, for the very first time, this thing that's getting people out and exiting from the traditional financial system, allowing them for the first time to own their own money, spend their own money. And I think that that market cap is pushing and pulling and pulling more out of the traditional fiat money into a savings-based economy rather than a debt-based economy. And that saving-based economy, and this is why I think we should be building for the crypto community rather than the institutions. While there will be a market, obviously, for the institutions, I think eventually that crypto-based community will have a bigger and bigger market cap and dwarf, and they'll have to adjust to us. And that's what we've seen over the years. What we saw over the years is there was a few people in a room with Bitcoin. They got very wealthy and they invested in an ICO called Ethereum. They then got very wealthy through Ethereum, and those Ethereum people invested in ICOs. Those ICOs people got wealthy, and then they're going to start investing in STOs. And the market cap gets bigger and bigger and bigger until eventually the institutions come over to us. And that's what I'm excited to see. Thank you very much.